Great. Well, thank you, Marty, for the shameless plug. Um, I appreciate that very much. But my name is Shelly O'Donovan. I have a small company called the Authentic Influence Group. We go into companies and help folks sometimes very quietly in terms of adjusting their body language, really communicating with influence in ways that are really authentic to them. So there's a lot of folks that have influence in different ways, but we really get the sweet spot. And we're often partners with management teams as they're going through big shifts. We do a lot of work in pharma. So those of you who work in healthcare know that it's constantly contracting and shifting and changing. And so as you can imagine, there's a lot of technique and an art and a science that has to go into communicating those big shifts. And we're often brought in when those things are happening in a very quiet fashion. But I'm really here today to talk about venture. And I also teach at the Wharton School. I know there's a few Wharton alum here. So I am looking forward to an esteemed panel here today. So I'm going to let them introduce themselves, but I've Peter and Brian here on the stage in person. Mauro is going to join us. I don't believe he's online yet, so we'll keep an eye on that. But if Brian, if you want to start out and just give us a little bit, I know tough act to follow today. So.
Yeah, so we're between Alan Patrickhoff and then Shelly giving us a report card on our body language. How do you feel about that, Peter? In any case, I'm Brian Smiga. I'm a co-founder of Alpha Partners since 2012. We're backed by the Pritzker family and 150 other families. We are a growth venture fund. And the reason we chose to be a growth venture fund is that if you invest in companies at greater than 10 million in revenue, you're only going to fail about 5 to 10% of the time. So it doesn't look like venture at all. And you also have a more predictable duration of about 5 to 6 years. And that's what we've been doing. And we're not raising right now, except next month we will come out with Alpha Israel, where we feel there's a tremendous arbitrage opportunity where capital has retreated, but in every conflict, investing in Israeli companies has outperformed. And there's a lack of growth capital in particular. And we've gone over and met with all the early stage VCs, and they said, oh, we're going to send you all our deals. And so we've hired an Israeli-American partner there. You really have to have someone on the ground who speaks Hebrew. And that's what we're doing. So if anybody is pro-Israel, I'm happy to talk about Alpha Israel. Peter.
Thank you, Ryan. Technology. Marty, you mean switch with you?
Oh, yeah, sure.
Okay. Okay. Hello, everyone. Again, tough act to follow there, but really happy to be on this panel. I think you've heard me a few times speak now, and the question I think about is how did I get on a venture capital panel? I'll try to explain it to you in a way that, following my initial intro this morning, where my real expertise is intellectual property and patents, big firm doing a lot of deals, joined here 9 years ago. In short, as important as intellectual property is someone like Elizabeth in the biotech and life science area, I chair the med device group. It's critical. So that is my real expertise. But when I joined in 9 years ago, companies needed capital. So I started working with everyone on capital, started hosting these family office investor meetings. And I don't run a fund. Brian's someone I've known and admired for years. Work with people like Brian and very interested in that. And then I work with a lot of people that mainly are family offices and investors, and we're always looking at deal flow. So I feel like I manage a fund. And then I work with many that are raising funds for new funds. We work, I probably represent 10 to 15 different families of different capacities. The main role that I have, and we get more into on, I wrote down a list of deals that may have interest. It's just kind of alternative deal flow. Something that I think Elizabeth mentioned during her presentation, working closely with universities, working closely with the government, DARPA and others, where it's not seen. But the government, the way I'd say it, I don't want to be controversial. I don't believe in this deep state or whatever. But what I do believe is that families do work with the government and others and have opportunities that maybe not initially public. So we get involved in that early. I think Alan gave a few references to that early in his career about some investing, and that's how I operate. So the need for capital is for every company I work with, and that's why I focus on capital. and we'll talk more about that as we go on.
Excellent. And I don't see Mauro yet. So I'm going to ask you both. The first question here is just, we're seeing significant shifts in venture capital from the rise of AI investments to challenges faced by traditional VC firms. So how do you think those trends are shaping both investments here in the US and then also in Europe? And what kind of opportunities do they create as well for cross-cultural collaborations, if you're seeing any of that and can comment on that?
Yeah. All right. Well, so venture capital investing is going like this. Is up 150% last quarter by venture capitalists in AI. But the AI companies that are investing are also going like this. It's not just based on nothing. Some of them aren't. But basically, venture-backed AI companies get to 30 million twice as fast as SaaS companies do. And so there is real value to unlock. And think about it, every boardroom in the country is figuring out how are we going to become more efficient using AI. So, this is like the dawn of the internet in 1998, 2000. This is like the dawn of mobile in 2010. You can't not be in it if you're managing a portfolio, but don't do this yourselves. If you want to know which venture capitalist, like Darwin, to invest in and let him be your black belt and demand from him that he'll let you co-invest in the next round of his deals, that is the only way you should do it. And if anybody wants to challenge that, we can talk afterwards. But I really think you need to invest in a black belt VC, whether it's Darwin or Bob Steinberg at Generative IQ or other.
Excellent.
What I'd say is work with a lot of VCs, but I'm going to give a shout out, as Brian mentioned, Darwin, but other investors and friends in the audience that we work with. So a lot of the deals that we look at is just, again, the flow of capital. We know that over the last 5 to 10 years of biotech has been brutal, not just because of FDA, just because of other reasons. It's tough. It's pre-revenue. It's all the risk involved in that. So that's well known in the industry. So what I do is I work with families that can pick up Bill and Chris Burney, obviously Keith, the Pinder in the back, other families. We kind of looking at deal flow and what makes sense. We all know that AI is the hottest thing right now, but I think someone mentioned earlier today, not necessarily from a chip standpoint, although that is a very exciting area and exciting developments. It's really the use of AI. And me as chair of the med device group and active with DARPA and so on, it's just so many deals. So see a lot of AI, the applications of it in medical technology. One I can tell you that's exciting, a little squeezy, especially for the gentleman or uneasy, but we have an IVF company that's using AI to determine the best, sperm available for babies in the IVF and also for the women for the eggs and stuff. So it's a different technology. Any technology that it's using scanning for breast cancer or other types of cancer, AI is being used actively for that. I think Elizabeth, if I mentioned her a few times already, it's because when she was speaking, I felt like we were working in the same area. Been working in the biotech area for years. Biotech industry was really adverse maybe 10 or 15 years ago to even sharing their data and using any kind of AI. Now I think it's fair to say they're all in, especially on phase 2, phase 1 and phase 2. Phase 3 gets a little bit more complicated, obviously, but those are the exciting areas that I see in AI and the developments that I think Tim Draper spoke at one of Marty's meetings and said most of his money is going into AI at this time. So I don't know if that answered the question, Shelly, but
yeah, sure. Oh, good. So I see that we have Mauro joining us. So Mauro, if you first just want to give us an introduction, that would be really helpful.
Thank you very much. Are you able to hear me?
Yes, we hear you.
Wonderful.
We can't see you though.
Yeah, I do not have my webcam because I'm with mobile phone and I'm outside right now. So sorry for that. I'll give a brief introduction. My name is Mauro Andriotto. I'm an adjunct professor in finance in Italy and Switzerland. I've been working with the European Commission for around 10 years. I've been a part of the investment committee at the European Innovation Council. Right now, I have a similar position with the Swiss Federal Agency for Investment, where I help the Swiss government to select disruptive companies to invest in. I'm also a partner of a family office based in Ticino, and I am the director of the Swiss Innovation Hub, where we are looking right now to invest in seed and stage A financing that I will be happy to explain a little bit more later. Thank you.
Great. Well, thank you. So, Mauro, since you joined us, I have a question for you. So, how does this cross-border collaboration create a unique opportunity for startups, and what makes this opportunity particularly attractive for innovation teams worldwide? I wonder if you have any thoughts on that.
So, Swiss Innovation Hub, where I'm the director, is in partnership with the Swiss family offices and the Italy's largest venture capital firm that is backed also by the Italian government. And we are actively investing in seed and stage projects. And this, we believe that this cross-border collaboration creates a unique value for startups, combining financial backing with the deep strategic expertise and offering an unparalleled growth platform for innovative teams worldwide. Our approach goes a little bit beyond the traditional investment. We aim at leveraging Switzerland's robust financial ecosystem and the will of the Italian government to foster innovation. What we provide to startups, we provide three main things: financial strength, technical expertise, and regulatory and market access. Financial strength, it means that our ticket goes up to 5 million in funding, structured through equity investment, subsidized loans, and the long-term repayments option. Technical expertise, because the Swiss Innovation Hub is specialized in cutting-edge technologies like blockchain, AI, Web3, cloud computing. We have our data center, and we enable startups to develop industry-leading solution. Regulatory and market access, because our partnerships grant startups the opportunity to navigate regulatory environments across Switzerland, Italy, and Europe. Startups in our network don't just receive funding, but they gain the access to an ecosystem. We provide strategic mentorship. Our team includes industry experts, professors, coaches, professionals, investors, and who actively guide startups in product development, process of optimization, market expansion. We are also able to provide the government-based incentives. Selected companies benefits from tax incentives and grants covering from 10 to 50% of their funding needs, reducing financial while enhancing the growth of the company, and clearly co-investment opportunities. As I said, we partner with all the main venture capital in Europe and in Switzerland, and institutional investor like family offices. We believe that this collaboration is attractive for innovative teams worldwide because it blends financial resources with hands-on support, regulatory advantages, and high-level investor network. So we think we are creating a huge opportunity for any good candidate that has a disruptive solution, a disruptive innovation that would like to present to us.
Excellent. So question for the room. So you actively track deal flow. And while you're working directly with family offices, I'd be curious what trends you're seeing in private alternative deal flow and how are family offices adapting to those investment strategies?
So as far as the deal flow and what we're seeing, there's a lot of different areas that we're seeing that's exciting. We focus a lot on data centers and people that come to these kind of meetings hear about the data centers and the use of energy. If you look out over the city, I love this view, but at night it's even better. From 1990 to 2000, I worked at Con Edison. So that's my expertise and background. And the need for energy with all these data centers is really critical. So Brian mentioned, I didn't mention this to him, but Brian mentioned Israeli technology coming out. It's some of the better technology. We're working some people on data centers and energy usage. So that's relatively new and really exciting. Work with several companies in that space, and it is very exciting. Other thing that you may have seen from the business section, actually the front page of the Wall Street Journal this morning, we had a lot of talk yesterday about US and China and just all the dealings and the background I have with intellectual property in China and so on. One of the key issues is dealing with rare earth minerals. As Marty knows, we hosted a gentleman, Dr. Jeffrey Ling, who started a company, On Demand Pharmaceuticals, developing technology in the United States. Because we learned from that project that 80% of the materials used to make drugs in the United States and around the world come from China. So as part of this trade war, I'm not sure if everyone saw it, but one of the reactions from China was to restrict the amount of rare earths and those minerals coming out of China. So we have several deals. I was mentioning Alex, who I got introduced to by Bill and Chris yesterday. He's got a particular deal on the rare earth and the mineral space that's very hot. Have another company, former military veterans and people from the CIA, investors that have another company doing very well. They're going to go public in a few weeks. So that's something that we see a particular interest as we kind of the need. I'm going to go out on a limb without getting into politics on Ukraine and what's going on there. But President Zelensky came to the White House really to sign this deal with the mineral rights deal, titanium, lithium, other things. I do not know anything for sure, but I'm pretty confident that deal is going to be signed because of the need for the minerals and just all these trade wars going on. So somehow that deal is going to get done. And again, it really comes back to supply chain issues and just what we see in the marketplace and working with different families on these rare earth mineral deals. So
I think it's been announced that he's agreed to sign it, but when the signing happens, who knows?
Oh, I didn't see. You get news right away. I didn't see that today.
Yeah, Mr. Trump said you don't have any cars, but Zelensky's got the minerals. Let me describe how three family offices invest in new opportunities and get new opportunities, because everybody wants to do directs. No one wants to pay fees, right? Soros, Joe Edelman, a Perceptive, big life science hedge fund, the Pritzker family. They literally call the general partner, said they sometimes put into business, like they put us into business, or that they invest in, they call them black belts, right? So if they believe that the silver economy is now a thing, right? And it's inevitable, right? You've got to have some dollars in the silver economy, they'll go get Abby and Alan to be their black belt. And that way, they're not just hunting for deals. Abby and Alan see everything, like he said, in the silver economy across the globe. They all should be coming to their door. And so then you've got a partner who you can bounce ideas off of. So I think it's best to be thematic and say, well, I'm interested in the global competition in deep tech, or I'm interested in the third of the economy that's eventually going to be spent on healthcare, and then go figure out who your black belt is. And every VC will take a meeting and see who's the most compatible. Like you're getting married, it's like a 10-year marriage to a VC. And then you don't only have to invest in their deals or the deals they help you diligence, you're going to get smarter by virtue of having this asset on hand. So that's my recommendation. I also think there's tremendous opportunities in the infrastructure for AI. So one company, I'd give you an example, it's a veteran-backed company that is essentially building a grid-resistant data center. So who needs this? Well, the NSA and every part of the government that can't shut down if the grid go down need this, right? So it's a real estate / technology play called Overwatch. That's an example of something I think it appeals to family offices.
Yeah, interesting. So back to that government angle. So I'm just curious, are there specific sectors where government-backed innovation is creating real opportunities for private investors? You know, aside from what you've mentioned already.
Yeah, I'll state that first. So there's a Manhattan project afoot right now in maybe 5 key technology areas: quantum, AGI, biology and health, advanced manufacturing, automation and robots, and energy. And because the Chinese outscore us, as we heard yesterday, by 25% when they're entering college, we can't assume because we're the allied world or because we're America or because we're entrepreneurial, we're going to get to quantum first. And we have to be first in all of these, just like we were the first to the atom bomb. There is no alternative. And so I'd say technology patriots like Eric Schmidt and Thomas Tull have formed very large funds to address this, and very large think tanks to work with government to figure out how to foster these Manhattan projects in public-private partnerships. Now, the good news here for investors is there's a tremendous tailwind of non-dilutive capital that can be available for the right projects. The good news is there's a very big customer that Elon and Trump are not going to cut their budgets around these 5 themes. So what's the way in? Here again, I'd pick a black belt. The black belt I would pick would be America's Frontier Fund. It's the actual founder of Incutel, who did his own fund for 10 years, Alsop Louis. I'm friends with both of them. And then Eric Schmidt backed him in America's Frontier Fund. There's nobody more connected to government to obtain this government insights and this non-dilutive capital and the precise needs. There's others, but I think that's a fund that's open. They're at the tail end. I would look at. I would also subscribe to SCSP.ai. It's a great source around global competition and technology. It's free. They do convenings in Washington on different subjects. So that's SCSP.ai. And it's a 70-person think tank solely funded by Eric Schmidt in DC to continue to push this. And I think, you know, Silicon Valley's takeover of Washington is actually a good thing here, right? And we actually have no alternative, right? We have to reinvent government using technology the way enterprise has reinvented. It's painful. It looks ugly right now. I'm a progressive, so it's not politics for me. It's just like there is no alternative. And I'm proud to say that Silicon Valley is buying houses in DC, and they're not just carpetbaggers, right? I think many of them are patriots like Eric Schmidt.
I think just to add to one point about quantum computing and go back to Alan, it had many takeaways from Alan's discussion talk today. But he mentioned part of his career went back into the federal government to do work with them. I'm sure that experience was very valuable to him. When I was at Jones Day, about 15 partners went to work for the Trump administration. I couldn't have to get kids through college. But I worked very actively with the House, the Senate, the FBI, DARPA, and others, shall I say, just on technology. There's a lot of people that kind of get confused with intellectual property, what that is, what is a patent kind of thing. So that's how I initially got involved. And then I started working more with DARPA. And about 2 years ago, they signed me up to become a formal advisor in intellectual property commercialization. Marty, because he's great, they've spoken at several meetings, and others, Office of Capital also spoke to. So anyway, the reason I say that to your point, Shelly, those interactions with government kind of, when they say, Pete, quantum computing is the it. It's really critical. So now what they did within the last year is they went around the country, scoured and said, what's the best technology out there? There's a lot of cyber, there's a lot of quantum, who's got the real deal? And then working with them, they put a certain amount of money into who's the family that Brian just mentioned. The Pritzker family put a lot of money into the state of Illinois. Other families from the Pritzker family and others put money into this so it's a joint kind of partnership arrangement that I get to see from that vantage point, that to really get things done, the government does work more closely with private industry. And that's the vantage point I got from working with DARPA. That's really exciting. The next quick thing I'll say just on aging, starting with DARPA, there was what they call exoskeletons. Some people may be familiar with that technology. That really was started for the fighter to get them through. But now we see a lot more of those technologies for the aging population to help them get around, whether they're full body, people that are paralyzed and so on. So we have a couple of companies in that space that initially was for the people that went through, soldiers that unfortunately lost some limbs and otherwise, but now it's being used in the aging population area that initially started out. So.
Yeah, excellent. So I'd like to kick it back over to Mauro. And your program targets a mixed sector approach and welcomes teams from around the world. So how does this openness to diverse industries and global talent enhance the potential for breakthrough innovation? And I'm curious what advice you'd have for startups looking to align with your investment criteria.
So our investment approach embraces a mixed sector strategy and a global talent pool. We aim at fostering a dynamic environment for breakthrough innovation. We welcome diverse industries and international teams. We would like to create a fertile ground for cross-industry synergies, disruptive solutions, and new perspectives. How we fuel the innovation? Well, first of all, with the cross-sector convergence. As we know, innovation usually emerge at the intersection of industries. Our openness to all sector, whether deep tech, fintech, healthcare, or digital transformation, enable companies and startups to integrate new technologies and create a competitive advantage. Second point, global talent, I would say local impact. By attracting teams worldwide, we bring together different cultural insights and problem-solving approaches, enriching the ecosystem with a wide range of innovative solutions. Third point, scalability and adaptability. Startup with diverse backgrounds are much better positioned to scale internationally, where they can leverage both Swiss innovation hubs, European network, and strategic resources to enter a global market. To maximize, I would say, their chances of securing investments, startups should focus on, first of all, technology and innovation. Projects should demonstrate a strong digital and technological component, or the ability to become more competitive through tech integration. And here we can help all the candidates to achieve this. Proprietary assets, such as patents, for example, are a plus for sure. Second point is scalability and market readiness. Investor seek projects with a clear growth potential, even if they are pre-revenue. That's not an issue at all. But a well-defined market entry strategy is essential. Third point, a committed team. We prioritize dynamic, motivated teams ready to execute their vision. Fourth point, structured business plan. We need to see clarity, strategic alignment, and investment visibility. And I would say last point is the need at a certain point to establish a company in Italy. Clearly, in Italy or in Switzerland, clearly every investor wants to know the jurisdiction where he's investing in. This is not precluding the fact that at a later stage or in their vision and in their strategy, they can export the solution also to other market, to US or to Asian market. That clearly it's always a plus.
Great, excellent. Thank you so much. So I'm curious too, when we look at relationships with family offices, right? They, unlike institutional investors, they often take this long run relationship driven approach. We talked about it yesterday. But I'm curious what strategies you've seen work best for fund managers and startups to build those lasting partnerships with family offices.
I think the basic thing that I think Bill and I were talking about, just trust on deals and just kind of sharing deal flow. I think like any business, you just got to have trust and kind of simple thing. I think Alan may have mentioned is just kind of being honest in your dealings and so on. We can't promise the success of certain companies, but we can tell them where it's exciting technology. One of the things even though I bring deals to different family offices and from the government and from private industry, one of the things I can really urge during this talk is the need to do due diligence. I see a little bit of too much of who's the lead investor, and everyone in the room knows that there's an assumption that the lead is going to do all the hard work, and then the follow-ons will just kind of do the investment. Unfortunately, I'm curious what Brian thinks, but I've just seen enough deals to raise concerns just with just doing basic due diligence and knowing where the money's going, the so-called use of proceeds, and just kind of tracking their financials. For privates, it's hard to get that. You want to make sure you get the certified, verified financials. I've had a few situations that, man, these CEOs were good and they can really do the marketing and the pitches, but it turned out to be fraud. Not a lot, but enough to say, be careful how you invest, where you invest, and just be concerned. So I say that because if I'm recommending a deal to somebody, it's my credibility and that trust and that value. I want to make sure that you're completely honest and saying, this looks good, but let's please talk to all our sources and making sure that we do the best thing here.
The first thing is take the word limited partner and put a strike through of limited, right? Your family offices, whether they've invested in you or not, if they're taking an interest in you, they are either a potential partner or a partner. There's nothing limited about that. Secondly, every single manager I've ever met is pitching, does too much talking. Your family office should do 60, 70% of the talking. Find out what they need. Find out what headaches they have. Find out what investment mistakes they made. Again, it's a friendship. It's not just a casual friendship. Like I said before, it's a 12-year relationship, okay? Find out how you can have a two-way street with them. You know, they're investing in other things. If you're a manager, you know at least 10,000 people that are investors or family offices or advisors or legal advisors, deal sources, founders. You know, be a connector for them. And there's other ways. Like I'm on Tony Pritzker's cycling team. It took me a few years to get invited onto a cycling team, right? But I mean, that shows you like a long-term friendship. Show them deals. So maybe they just don't like doing funds. They don't like the fees, but they do deals. You say, okay, we're going to put you on our deal list. Twice a year, we invite non-LPs into our deals when we have capacity. That's how we got Joe Edelman into our fund for $50 million. He did a deal with us. It happened to be our best deal. He lucked out. Invite them into deals. Offer to diligence stuff for them, like diligence, right? Like, oh, do you need to know somebody who is an IP attorney in blocking patents and AI? Let me introduce you. So that's my playbook. But the biggest thing is take limited off the limited partner word and do only 30 to 40% of the talking.
I just want to jump in here for a second. So I want to get back to Andreas Kalianis, and he was talking about crowded trades and venture, et cetera. But I think there's really, getting back to Peter's theme, there's really an emergency in venture capital, which Americans aren't perceiving. So there's a study done by the Australian Strategic Policy Institute, and in 2000, China led in 5 of 44 strategic technologies. As of last year, it leads in 37 of 44. strategic technologies, and is second in all the remaining ones. So supercomputers is number one, synthetic biology number one. I mean, it just goes on. So to me, there's
Hypersonic
a call
missile
to action
technology.
on that. Besides the fact that their students, half of their students are graduating at United States college engineer level from high school, whereas only 8% of American students are graduating at level and fewer European students. Peter?
Yeah, what I'd say is interesting. Growing up, I grew up in Brooklyn in the distance of Arizona Bridge, and my dad was in science growing up, and he said, Peter, in October 1957, this thing Sputnik happened, scared the crap out of all of us. It used to be this, I love basketball. He said this basketball-sized thing went around the earth, and it would send off these sounds, and you know, everyone was afraid of nuclear war. Now, that was the impetus for starting DARPA, and that's where it worked. And it's really taking the government money in combination with private investment and trying to take the lead. It's very, very difficult, as we all know, and as Marty mentioned, because of just the need for capital. Before President Trump's first administration, I worked with the Chambers of Commerce, National Chambers of Commerce, New York's Chambers of Commerce. On the top floor, we have 42nd floor, we had a full with Chinese officials trying to work out a deal where we could share technology or do things so that it wasn't a race, because sometimes these race leads into wars. But I had a gentleman come in from China, the Chinese bank, said, Pete, I have $200 billion to invest in whatever startups, whatever companies you're doing. At that time, I was only focused on IP. I didn't know this whole business. But it's just, Marty, it comes back to capital. They're putting capital into these areas. I think they're focused on it. I think the entrepreneurship and innovation system in the United States gives us still a fighting chance, but without that capital, I think it's really challenging.
Yeah, so we have an audience question here.
Yeah, so Peter set up a segue into something that Brian had mentioned previously about resilient energy projects. Is anyone focusing on making these resilient to EMPs, for example? Electromagnetic pulses from
Focusing on, sorry,
to make the power projects resilient to EMPs.
Yeah. I mean, I think energy is one of the 5 areas because of fusion and energy efficiency that we can't let our competitors in the world get too far ahead of us or ahead of us at all. One. And secondly, I think you're going to see a very rapid change of everything we call sustainability and ESG now be called nature-based economy and nature-based technology. And Abu Dhabi just announced a $100 billion investment in that, and that includes energy, right?
No, I'm referring to protecting the energy plants from.
Yeah, so
nuclear-
going back to when I was at Con Edison, that's an issue, and these electromagnetic pulses. I don't know how serious it is. I've seen the debates. I mean, it's coming from the moon or outside in space and stuff. So I don't know how serious it is. I think an incident happened a few years ago on that, but protecting the electrical grid is a critical thing. If you look out here, the electrical grid for New York is on the ground. A lot of the devastation we have with all these storms and stuff, the electrical grid is above ground. You look at Florida and all these things. So one of the many companies doing boring and drilling technology is to get things on the ground and so on. But the energy system from a very high level is broken. If you look at 50% of the power coming into New York alone is from outside the area. One of the biggest areas that you've heard rumblings about, but not really, it's not in the news, from Canada, is I've been up to their hydroelectric facilities. They just open a few circuit breakers, they can devastate us and say, you want to start a trade war, we can really address that. So fortunately, that's not happening, but the energy system overall and getting more generation to where the usage is, and there's more technology coming out on that, window technology and so on, battery technology, that's going to be an exciting part for the future. So you're right, the energy system, and there is, I think yesterday the gentleman talked about deep tech and the next version of nuclear power that's clean, Mr. Gates and others are working on, is exciting.
I would look at Overwatch as a company, that's the resilient data centers. And I would look at the VC firm in Chicago called Volta, which focuses on, it's the leading battery technology venture capital firm. Just go read their websites and see, get some more efficient.
Yeah, I think Jim has a question.
talk loudly enough. So as we all learned from the late 90s, 2000s, the internet was incredibly creatively destructive. And if you were in a standard bricks and mortar retail business, you were out of business pretty quickly within a decade. When I think about the world today on steroids, and I think about AI, and well over $100 billion has been invested in AI in 2023, 2024. Who is sitting and thinking about where the areas that would be most disruptive, what existing companies are going to be most challenged and most likely to not survive?
So is there a think tank that's doing that? I think it's a universe of groups that are doing that. I think Elizabeth mentioned the work that's being done at universities, whether it be Stanford, some of the best, and all over the country. Those are groups that we work with that have people with PhDs, people extremely smart like Darwin, that are looking at these issues and saying, how do we, how do we make companies out of it? How do we commercialize it and so on? There needs to be, I think the government does a good job. We could always do better, more of a partnership in developing that because of the need for that. If you look at China, for example, they're kind of mandating it, where I think it's coming more from the growth of universities and our startup, which separates us from the rest of the world. So.
From a venture perspective, as you know, everything's up and to the right. So we don't look like at who's going to get hurt so much, but we look at who's going to benefit the most. And, the ingredients in applied AI that I think are really critical, not only the scientists that are building it, but like, what is the data on which the learning models are going to be built? And is that proprietary or advantaged over everybody else? And we look at what is the customer ROI that's relatively quick to obtain once you apply AI. So examples from our portfolio would be Rad AI. Now, there's many radiology AI computer vision companies, but it's number one. And we feel it has the best data sources and it has the best customers, so it will remain number one. And technology has always rewarded the number one. This is why it's so dangerous to be a family office investor in direct deals, because if you're investing in the second, third, or fourth company, you're not going to get alpha, right? So that's an example. Shield AI, instead of focusing on the entire battlescape, it just focuses on flying aerial vehicles, right? It's number one in that. I can give you many more examples, but you think of the data that's informing the language model like oil. And then you look at what is the customer ROI. In Rad AI, there's a huge radiology shortage. And medical students don't want to go into radiology because it's so stressful, it's so repetitive, right? So this solves that problem for hospital systems and the health regime. And you can see it show up in their early trials where they mention, what the hospital has gained, what individual radiologists are saying. You can see, wow, this is not a nice to have, this is a must have.
Yeah, any questions in the audience?
Alpha's sometimes good and alpha's sometimes not. Sometimes alpha can't get to market well, especially in health where reimbursement's an issue and they just fight and fight. All that fighting is how the second ones, the followers, beat them. So in that sense, you got to watch out.
Oh, I agree with you. Often the first has arrows in the back. I have plenty of arrows in my back when I was a founder.
You watch the alpha.
Yeah. But I'm saying alpha as above market returns.
Oh, okay.
I was using it in that sense.
Got it.
Next question. One more question.
One more question.
Don, we want to have closing remarks.
Yeah, that's great.
I want to give a shout out to a friend of mine that Martin over there got me introduced. There's so many different sectors that are being innovation is coming into place. Initially, when I first met Martin through some investor friends, the Pinder who stepped out, working on the tobacco industry, the nicotine area. If you study that area, it was initially like, I don't want my kids doing it. I don't want to smoke. I don't want to be involved in it. It's a nasty business. The innovation going on there to focus on the nicotine space itself and to get away from the smoking, the tobacco aspects and the cancer causing effects of that. It is what makes my job so interesting. My son was here yesterday. He was like, wow, that's really cool stuff. This innovation is across all sectors, and it's fascinating. And the venture community, we couldn't do any of it without the venture community and so on. So thank you very much.
My general philosophy is you don't want to be too early and you don't want to be too late, to Elizabeth's point. And in the alpha model, we wait till companies get to 10 million in revenue or growing 50% a year and have attracted a new lead investor and are first in their category. We can only get into those deals because we pay the VCs carry. We split our profit interest with them. So we're not so smart. We're just generous. But I think family offices, and we can all have a philosophy like that, where, let your key managers knock themselves out investing in a portfolio of 40 companies. 4 are going to be interesting. And that's where you can write checks. And the same thing's true about sectors. Like we talked about, Alan's a good example with Silvertech. I interviewed him maybe 5 years ago when he was just getting started. You were 85 or 86 then. And clearly you're sticking with your bicycling. Well done. Anyway, that was pioneer, right? But now where they are and the world is, now we're at the scale up time, right? So I do think his fund is very good investment, and he's not paying me to say this, but you see how it's in the midpoint? They're not first. We're at the early inflection point of scale up. And I think whatever you do, always think about this. I'm going to be patient. I'm going to wait, but I'm looking for those early signs of scale up in sectors and in problems to solve. So I think patience is important.
So Mauro, if you can give us some closing remarks, some quick closing remarks, I appreciate it.
Absolutely. So if I can say just something about the competition for innovation, I've also taken a quick look to the article that Marty shared in the chat. I have to say that in Europe, we have a model that has always been based on the public for financing innovation, because the private sector has failed. In US, you have a system that is based on private sector for financing innovation. Silicon Valley is where the major startups have been funded in the past. In China, they have a model that is combining both the private sector and the public sector. And maybe this model may be the future model for financing innovation and being successful. I think that we should also think also on how we are financing innovation.
Excellent. Well, I just wanted to thank my panel for today. Excellent insights and thoughts. I think you gave these folks a lot to think about. And, please approach these folks and ask them questions if you have more questions.
How was our body language?
It was good.